Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and you're all welcome to visit the Bookmap Discord TraderLab. So you know the TraderLab is a group of like-minded traders who come together to leverage their collective experience, and the TraderLab is open to everyone. Doesn't matter how long you've been trading or even how you do it. What does matter is if you're interested in building out a potentially sustainable business model to operate and create a career path for yourself. This is what the intent and the reason the TraderLab exists. The fantasy of trading is really quite different than the reality, and I think the sooner you get an idea of what this business really is, then you might be able to put your energy into potentially more productive pursuits as you develop your craft. Trading is not plug and play. I know we see our influencers all over the planet now due to the internet. Anybody can be an expert, and everybody has winning trades. So that's all nice, but how do we have a consistent process that has an actual statistical edge? That is what separates the winners from the losers, in my opinion. And it's not only having an edge, but it's also developing the understanding of market mechanics, how it works, why it does what it does, how to get in alignment, and understanding that the outcome of any interaction is random. And for us to operate in randomness is completely counterintuitive. So not only are we in an environment that's 100% random 100% of the time, in spite of your desire for confirmation, certainty, and predictability, if you can put aside the needs that are psychologically generated and deal with the actual environment, you might be able to solve for that environment versus trying to force the environment to fit into your psychological needs. Isn't that an interesting thought? Well, if that thought interests you, then you're all invited to TraderLab, and there's a link in the bottom of YouTube if you are inclined. And thanks again for visiting the lab today. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only, and you are all invited to the TraderLab. The Discord TraderLab, there is no cost for it. It is in real time versus YouTube, which is delayed, just the nature of the process of YouTube. Also, this stream is based on structured trades, and there's 60 PDFs of these. They go back to 2020 and wherever. I was sharing these because many traders were asking me, what are you doing? And, it's always interesting, what are you doing? These are actual trades, and some are just screenshots. There's no cost for this. I'm just sharing ideas. Each trader has to adjust these processes and reverse engineer them and take the concepts and make them into their own. So I've shared, 46 years of wear and tear and development, and I'm still working on it, by the way. If you're in this business, you'll never be done. Now, let's look at yesterday's RTH. Now, we know about yesterday, but I want to share a little bit about yesterday to you, because yesterday was pretty interesting. In the morning, we came out of the chute, basically RTH open, and we were longs only. Then the news hit the tape, if you will, about the Iranian missiles and the longs. So let's think about it. The market is short. Market goes up, squeeze the shorts, gets new longs in the market. What does the market do? The market goes up to go down. And what does it do? It takes out the sell stops under here. We come underneath. Now, this sets up a couple possibilities. We can continue down and jump out the window, or we can, once we take out the weak longs, we can get and get new shorts in. We can now squeeze out the shorts. That's two-sided trading. Now, there's another little piece you might find. So yesterday, if you remember, was longs in the morning. Some traders got short. we had a trade that's a structured trade called the IBF, which is a reversion trade, which would bring you back here. And then since we are bullish, theoretically, in a higher time frame, out the top. Now, but here's what's important about today. Why is this important? Notice what happened. RTH close is here. The volume point of control, the highest volume, and think of this like shopping. The highest volume is here. In your store, wherever the high volume is the retail price. Your can of tuna, it's $1 a can. Everybody buys it at $1. Well, if the previous price of the tuna, which was down here and down here, is too low, I come up here, I get news. This is the retail price. It disrupts the auction, missiles. Then the news is discounted. The buyers come in after the sell stops come out. Where do I come back? I come back to the mid, the VWAP. Sellers at the VWAP, very mechanical, hold the low, and off we go. VPOC above this, and new VPOC, new retail price. Now, what is this here? This is the ETH. What do you notice? Other than the RTH close and opening up again for the ETH 1 hour later, continues. What does that tell you? Too low. Too low. ETH low. Settlement. Too low. Now what? Great. ETH high. Huh. Now what? Watch. Now, grab your grid sheets if you're in TraderLab. This is called context. Context is king. It's number one. Would you say is the condition of the market? Long. What do we want to do here? Maybe get long. If this is yesterday's settlement and the ETH low and yesterday's high, what do you think? What are the possibilities? What are we doing? We're opening out of range. RTH open, whoop, is there. Gap, you know that. Out of yesterday's range, out of yesterday's value, we're out of here. We'll see you later. What does it mean? The market is out of balance. Now what? Two possibilities. Those who are long in here, having a wonderful time, in the Barca Lounger, if we might get profit taking. That is called responsive selling. What is responsive selling? Gap high, you're long from wherever, and what do? I'll take some of that. Thank you. Let me cash in that coupon at the counter. So now, let's go into the RTH. And that sets up what? The ETH high. Let me give you some statistics. Now, there's two possibilities. Remember, responsive selling, but it's a huge gap, and you do notice we got some buyers. What do you want to do? You want to trade in the direction of the imbalance. So we're out of balance, and if we rotate, we want to get long. And here's the other thing. This to me was called the proverbial icing on the cake. Icing. Statistics. We are opening higher outside of yesterday's range. Statistics. Grab your pen and paper, write these down. Past performance not indicative of future results. You know what I mean. You got to vet everything. Taking out the first hour's high or low, which is called the IB, and you notice here we hadn't taken it out yet. There is over a 98% probability. Pick one. Taking out the ETH high or low, and this is the one that drove the bus for me. Almost a 98% probability. Well, there's the ETH high. There's the ETH low. I'm going to ask this astute group of traders, what do you think? Are we going to come there before we go there? In my mind, given this, I'm going there. So that takes shorts off the table for me and just says, get long, young man, get long. So that's it. No shorts for me. Now, that doesn't mean you can't take shorts. It has nothing to do with you. I'm just talking about me. So let's look. Everybody tracking so far. If you have questions, please post them. If you're in YouTube, hope you're doing okay. How you guys doing in YouTube? You guys conscious? Please give a like if you're visiting in YouTube. If you're interested, Abdullah, welcome to the TraderLab in YouTube. There's a link in the bottom of YouTube, and you can click that, and it'll take you, it's for Discord, and what you need to do is confirm your email address, and you'll get a little code. Then you apply, and that'll give you access to the Bookmap Discord, TraderLab, and all the other education. And it's all available at no cost. By the way, besides the 60 PDFs of structured trades, I'm going to say again, these are not plug and play. There is nothing mechanical in this business. It just doesn't exist. So if you look at trades, they're not mechanical. You really need to invest time to understand where they fit and what qualifies them, because everything is sort of in flux. So in the TraderLab, we have structured trades, but they're plugged into the context I just read. So anybody who's visiting and is interested in this, you got to reverse engineer it. The other thing is some traders are going to be selling this today. Now, it's not what I do, but there's no right or wrong. The answer to trading is in metrics, probabilities, statistics. Some traders are going to trade counter rotations. I use counter rotations in certain conditions for trade management and to getting continuation trades. It's all a function of the individual. Let's look at the opening here. So RTH open. This is called the naked volume point of control. Not so important, really. Here, it was a target coming up. But what do I know? Let's come back to what I know. Overnight volume point of control. I didn't mention that one to you. What's the probability of getting there? About an 81% probability. So if the market opens here, I am going for 81% probability there. And I already know I am going for that and this. So these are on the hip parade, 47.5-ish ballpark, ETH high. Those are my targets. This is my next target, and I know I have targets below just in case. And the market doesn't typically go, it can, but it typically will rotate. So let's look. Is everybody tracking so far? So before the market opens, I already know my plan. I don't know what the market will do. Part of the thrill of being in a random environment. You should be writing this down. You have to anticipate behavior to participate. You cannot predict it. So in your trade plan, if you're in the TraderLab, you would already know your trades. You would have structured trades. It's all planned out. You step in the market, you know what you will do, and you know where you might do it. You then have trades laid out with locations, and you're looking in their areas of behavior. There's nothing rigid. You're in a fluid environment, and it's random. This is what messes with us psychologically. We are risk adverse. We're looking for certainty, and we don't have it. What do? How about this? Casinos operate in the same environment. I got to bring this up because this is, if you think trading is plug and play and mechanical, it is not. What it is consistently, it's anchored inputs consistently applied in a random environment. So anchored inputs means fixed. Casinos use anchored inputs. Their games have anchored inputs. In other words, they just play them the same way. They don't know what's going to happen when they play the game either. But they do know what they're going to do. They're not making it up. They're not responding to how they feel. They're not responding to the paying a gambler on the last hand and then skipping the next hand or changing the game. Does that make sense? If you are not doing that, then you are sitting with the gamblers. So the idea in TraderLab is to help you understand the business you're in and to develop the processes to only play games or structured trades that have an edge, and then dealing with your psychology and your fear. And if you don't think I'm fearful, of course I am. Why wouldn't I be fearful? I'm wired for fear. So let's get over it. We're all fearful because of uncertainty. And you might not define it as fear. You might just say, I'm anxious. Well, I'm anxious. Not traumatized. That happens other times. But I'm anxious because of uncertainty. So now I accept my anxiety, but I manage my uncertainty, my fear or anxiety or apprehension, they're all the same, with metrics. So statistics, which I've already given you some for this morning, give me a sense of possibilities with edge. That's where I start. And my plan exists before the RTH open. I know what I'm going to do. I don't know what the market's going to do. I am anchored, and then I am clueless, but not ignorant. RTH open. Put your questions in there. I'll do my best. So what is this? I'm now going to take you into fractals. Now, what is a fractal? Let's not get carried away with terminology. You guys think in time frames. I get it. We all do. But when you get into this, the developing time frame, the clock does not exist. And again, I'm talking about my perspective, how I had to change my thinking. Did everything you've done, and unfortunately probably a lot more because I've had more time. And I've gone down more dead ends with ideas, either my own or just, the ideas that are out there in the retail space, Fibonacci, Elliott wave, Gann, doesn't matter. Pick one, it's all the same. Everything works randomly, and collectively, maybe nothing works except random winners. If that's you, you're caught in Trader Groundhog Day, and that is working hard, tweaking, tuning, and waking up in the same place. I did that for many years. And part of the problem with that is I would try new things, and they all worked, except not really. They just seem to work because they're random. So let's look at the behavior. RTH open. We're in here not even 1 second. This yellow line is where the high volume is. It starts at 0. What you're going to see here, the chart volume profile is going to show us everything on the chart. Now, this is the RTH open, so this is ETH. It's in here. This starts at RTH open, and it's going to show me only the volume for the whole day. And every time I zoom in and out, this is going to add or remove volume right here. So this is a fractal. Now, they start out looking the same, but they're going to change. So right here, I've got liquidity in the book. Now I'm going to talk about order flow, and I have no clue. Liquidity is like, it's like stepping on a banana. It's slippery. It can do anything. But I do know that the limit order book is the passive side. I see the icebergs, but this guy's doing here, this seller, is taking the other side of the buyers. And what do we anticipate on the open? Profit taking. Does it have to happen? No. So I'm looking, and that's called responsive selling. If I go back to my grid sheet, I'm opening in a gap. Is the market responsive? Well, is it? Well, this is responsive selling. So what does that tell me? If the market's opening out of balance, what do I want to do? Well, if I see profit taking, I don't want to get short in this condition. I want to be looking for longs. Now, of course, the joy is where, right? I know. I feel the same way. I said feel. That's emotion. Where? Let's mark this. Variable high volume node. It's as good as name as any. I made the names up many years ago because I didn't know what to call it. So, because I started observing phenomena, and nobody was talking about it back when I came up with this. And this is many years ago. Before there was even volume profiles, happening with what's called point of control in market profile. And I got a lot of pushback from the aficionados, those who are rigid thinkers. And I've always been curious, why does it do this? What's that mean? And you go, I don't know. I don't know. What does it mean? I don't know. What does it mean? Too high. What else is here? Opening swing high. Maybe. Don't know. Whoops. So I'm going to put opening swing high in. What's going to be there? If I actually get shorts, there'll be buy stops up here. So I'm going to put it there. And I'm looking for a long. Well, that's it. Where am I trying to go? Overnight volume point of control. Where is that thing? There. What was my probability of getting there, you ask? This is also so important because now I have a target. It's almost 82% probability to get there. So my longs that I'm looking for are initially to go there. So let's see. Sellers. Teeth chatter, no idea. Sell stops coming out. Too high. VPOC migration. This is very sensitive and this is not mechanical. Remember, I'm only looking for longs. Under different conditions, this would be a short for me. So nothing mechanical. Let's watch. What do I know here? Sell stops. And why does the market go up here? You ask. Here's why. These guys were absorbed. There's passive buyers here. Now, we don't know until these buyers are above these guys. There's buyers there. Sellers, buyers. Buyers are now above the sellers. Resistance. Pullback. Pullback. Buyers. Buyers are here. Let's watch. Now, the way this might work, and this is this trade that I'm going to share with you is extremely aggressive and is absolutely not for developing traders. It is where it's the last place you want to trade unless you really are already got your stuff together on the other structured trades I've shared. This is advanced because of speed. We're in here 4 seconds now. Imagine what it takes to be able to make a decision in an uncertain environment in a couple of seconds. This is not where you should trade because you have to have unconscious competence to trade. When I trade this, I already accept I'm going to take potentially more stops because I'm acting with minimal input. What I do know is over 80% probability to go here. So as long as I can find a long in this context, I'm going there. That's my trade. I'm sticking to it. Now let's look at this, what's happening here. I'm going into microstructure again. So too high right here, maybe too low right there. This now is either support or becomes resistance. If I get below it, it is too high, too high. I'm going to label it. Let's just watch. Now, this is an extremely aggressive trade. And what I always suggest in TraderLab is that traders narrate, research, replay, screenshot, and make it part of your unconscious behavior. You're going to see this behavior happening all over the place. But when it happens on the open, because of the speed, it is very hard to operate in. Let's watch. VPOC migration. Right now, the language is too high, too low, too high. What's going on? Break low, too high, break low, retail, right there. Let's watch. Right now, no long. This is saying lower. This is language of the market. And what is the yellow line? It's the highest volume in the developing time frame. The way I think of it mentally, because I need to relate to this in some fashion, is shopping. I'm not paying that. I'm out of here. Okay. Too high. Back here. What do you think? There's the buyers, Tom. Why isn't it going up? Because the passive side is here. See the icebergs? They're selling. What happens here? Sellers. I come back. Why don't we go up here? Well, it's the bid in the VWAP. What else? The sellers are there. Right there. Why didn't it go up? Buy delta. Tom, it's got buyers. Right. What it's got is buy stops, initiators, and if I can't clear this and I break down and now I can't get above this absorption, south. Now more volume here. I got my buyers here, VPOC migration. If I can't get back at above here, where am I going? South. I'm spending time because this is language. Now what? Buying icebergs, sell stops. Thanks for playing. They get a coupon to the buffet. I am looking for a long. I don't have it. I'm sitting here going, where's my long? Here's what I know. Too high, too high, too high. Resistance. Let's look. See the resistance. Follow. What happened here? Buyers. What happened here? Buyers and sell stops. Passive. Too high. So here I see my buyers. Now, where have I seen buyers? There. No bueno. Under here. Buyers here. Resistance. No bueno, but a suspect. Sellers are here. Buyers are here. Where did the buyers take over? Here. Liquidity here. No clue. Liquidity comes in here. Icebergs, icebergs, icebergs. Teeth start to chatter. Buyers. Resistance. Right here is a long, or you can wait on it. Now, this is advanced. That's why I'm saying is don't bother with this. So let's look. Now, this is right here, no clue. But where else are my buyers? I only had a shot there and I got this. Okay? This is the buyers. These are the sellers. I want to be long. So I'm looking for the buyers to start taking on these responders. Now, let's go back to our grid sheet. Is the market responsive? Well, what do I got here? 4 points? Yeah, but not really. What do I want to do? I want to trade in the direction of the imbalance. Is it continuing to drive up? The question becomes, am I going to push higher? And remember what's up here. Stops. Potential support, resistance, teeth chattering. Break high, want to get long. Watch. Where's my support? Let's look back here. I know I got buyers here. I know I got buyers there. And here's the coup de grace. The sellers were there. What happens to these sellers and these guys? Under the bus. Buyers, sellers are here. Buyers, 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 buyers. Where's my sellers? There. Rotation. Where's my buyers? Here. So, buyers here. Who knew? Sellers are there. Sellers are there. Break high. This becomes support. See it? Support. Support. Buyers above. So buyers are there. Buyers are there. Sellers there. Long. 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 Where are we trying to go with this thing? There. Scale. And then going for the top. Going out the top. Who knows? Now let's watch. Pullback. Where are we pulling back to? Let's look at our structure. Support. Support. These are all longs in TraderLab. Long in TraderLab. Selling is here. Got our target for our scale, right? And what was the probability? 81%. Would you scale ahead of this? Me? Yes. So now I'm risk neutral. What else do I have? I have another long here, or I'm just hanging out. Where am I going to try to go? Back here, right there. Now where? Trying to come out the top. ETH high, wherever that thing is. I forgot, but it's up there. It is. So that's where we're trying to go, and here. That's the plan for the day, and then whatever happens, happens. Let's go. Now at 9 o'clock, now all these trades happen, within the first, 10, 15 minutes. 9 a.m. we have an important report, and you would know that, right? Is everybody tracking? Adam, if you're new to futures, come to TraderLab. That's really where to start. Yeah, James, hi. Welcome to the TraderLab. You guys should all visit TraderLab. There's no cost for it. I mean, TraderLab is a professional community. It's not romper room. Now this was exciting. This is trading, guys. So let's take a look here. So you would be risk neutral here, and then we're going for the ETH high. That's just part of the plan. Now, there's a couple ways to work with this, and this is where your individual trade plan comes in. I can't tell you really what to do because I don't know what's right for you. This is where you find your groove, your dance partner. The way I view this, and you might want to think of it, here's a couple different ways to perceive what we're doing. Trading is shopping. So if you know how to shop, you already have the basis of trading. The issue for us is we're not in a shopping, in the sense of the supermarket, the price is set. And if the price is too high, you're not going to shop there. If it's a fair price or retail, you'll pay it. If the price goes on sale, you'll perceive it. If you perceive it as undervalued, you'll throw two in the cart. It doesn't change much in the store, though, time-wise. In our world, it's changing all the time. So we're doing the shopping, but we're doing it in what's called fractals. So when you have this chop right here, it's actually an auction. Consolidations are auctions. So, and what it is the market pauses. Like here, let's just look at this. Too high, too low. Chop. I'm not paying that. Yeah, but it's on sale. And the buyers were there. Why? That seller was absorbed. Buyers are here. Sellers are there. There's a sell delta. Sell stops. Thanks for playing. The buyers absorb. We break high. Now what? The buyers were here. The buyers are there. What happens over here? Too low. The sellers are absorbed. Where's the resistance? It's right there. The buyers are here. The sellers are there. Break high. Too low. Where do I come? Right back where the buyers were. What do? Give me some more. Thank you. Appreciate it. Off we go. Too low. Too low. Too low. Chop. Too high. Too low. Break high. Support. Thank you. Break high. Sellers were here. Support. Sellers are here. Buyers are here. Going north, Lewis. What's here? Chop. Sellers are here. Buyers are here. There's the absorption. Microstructure is in here. Break high. Support. Sellers are here. Buyers are there. Now the buyers are here. Going north. Microstructure is here. Buyers are here. Going to the moon, Alice. Break low. Warning, Will Robinson moment. Or you're out of your trade. Then what? Come down here. What do we know? Buyers are here. Buyers are there. Buyers are there. Rotation. C'est la guerre. Now, you could be done with the long, or your stop is outside somewhere. That is an individual thing. I couldn't tell you the right thing for you. I wish I knew the right thing for me. The problem mentally is that it is random. So we don't know when it's going to come, how it's going to come. We know nothing. So if we know we don't know, we're always going to give back open trade profits when we get taken out. Now, the thing about this is if we accept that the rotations are random, we're never going to pick the high. We're never going to get the low. We're not going to get anything. We're going to get a piece of it. And psychologically, we want all of it, right? I mean, I'm going to ask you how you feel. Notice the terms. Feel. How do you feel when you're long and let's say you're stopped wherever it is and you give all this back? What is your emotional response? It's like everybody else is probably, I should have got out up here. Let me tell you about shoulda. Shoulda has nothing to do about it. Hindsight is 100% clear, and only the lunatic in your head, who I call Hyde, Jekyll and Hyde, Hyde's the lunatic who is judgmental, the self-talk in your head, very destructive, and is clueless as far as this business goes, but critical. Why? You should have got out. Well, no, you should have not have got out. You should have followed your plan. Randomness is 100% of the time in this business. So there's no such thing as shoulda. The only thing you have is your plan. That's what you shoulda do. The rest of it, forget about it. Your emotions are going to still be triggered. You should have got out there. Well, yeah, if I had the crystal ball, I would definitely get out there. But until one shows up from Amazon.com, there is no crystal ball. There's only maybe. Write that down. The best you have is maybe. Maybe it'll keep going. Maybe it'll rotate. Maybe it'll never come back, and we just keep going. Maybe it will. Maybe it won't. C'est la guerre. 9 o'clock report. Now, this is your variable high volume node. Now, right here, we get VPOC migration. This look familiar? And what does it say? Let's speak language. By the way, the way I kind of look at this, and I mentally, again, I had to find things to grab onto that I already understand. So if I learn to read behavior, so I'm not using indicators, instead of an indicator, which is really a translator of some sort, not a very good one, even though they, eventually the indicator is going to be right. Well, in the meantime, what's going on? Sellers are here, buyers are here. As far as I know, what's it tell me? The retail price is here. In this auction, sellers are here, buyers are here. You see where the buyers are? You can see them. You can see the sellers here. When I break low, it's saying in micro, this little high volume area is too high. And again, only in hindsight. That's the joy. Hindsight. Buyers were here, sellers are there. These see the selling absorbed. That's why the buyers are above this guy. Why are we not going up? Iceberg, sellers, don't know. As far as I know, we're doing this. When I break low, that's trouble. Same thing here. When I have my buyers here, I've got my sellers here. When I break low, there's trouble. Get above this, break low again. Now I get VPOC migration. This is compound. Again, language. What does it say? I'm not paying that. Yeah, but it's on sale. Retail price. Volume. In this volume, we got two sides battling. If this side gives way, then the longs that are in here and maybe in here, their sell stops then are on the hook. That's what I know. The next piece, this moves up. Think of this as the same as that. This is a fractal. In other words, this little thing. And this is for the whole day so far. So if I look at everything, the highest volume at the moment is here. This is like a retail price. If I go down in time frame, that's a retail price. If it's too expensive there, is it too expensive here? Here's the possibilities. Chop, 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 break high, too low. Happy days are here. Chop, 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 break low, too high. Then what? This moves up, retail price. That's retail, too high. This is retail in the day. So it's either this to there or break. We break. That says, in the language of the market, too high. Now there's trouble. Where's my support? It's down here, and there's stops under the market. Let's look. Where's my stops? Under here. Where's my support? Here. What is this? A sweep. When does it happen? There's the report. Let me show you. So there's a couple longs here. 9 o'clock's a report, right? And Powell, I think, and it was consumer sentiment. So this sets up a long. If it's in your plan, here's your absorption. This is a trigger. This is your resistance. It's VPOC and a long after taking the stops and come up to here. So if you got long, you'd scale here, and then you're looking to continue. We come back down. What is here? Support. This is still a long. Going for this. Again, with the trend. Scale. So if you took this here, you got this. This is a buy sweep, and it says potential counter rotation. Buyers were here. Buyers are here. Support, resistance. Why? Sellers are there. Sellers were here. And there's a variable high volume node now. Variable high volume node is resistance. And the VPOC is migrating down. So the teeth are chattering a little bit. However, the trend is up. So for me, it's longs only. I got to get through this. So let's look. Big sweep. So on this long, you'd scale, you'd be risk neutral. Long, you'd scale, you get risk neutral, you get taken out, you'd scratch. You get a big sweep. Now I see the sweep and I still want to get long, at least for me. I'm not saying it's a good idea, I'm just saying it. And I know you wrote this down. This is the excitement of having a plan and statistical probabilities. 68% probability I get there. Well, I already know my statistics. So when I come down here, I'm already looking for it. And I don't know, I'm like you, I'm clueless, not ignorant. I have nothing else in the area. Overnight mid. What do I find? Sweeps, and I get a reversal. Back on the longs. So let's talk about how you get long. So this is real fast. You see this and it's like, what happened? What I see here is sell stops coming out. So they took the longs out and the icebergs are in here. Sellers are being absorbed by the icebergs. There's the icebergs. There's my sellers. My sellers are here. My buyers are here. And my buyers are now here. As soon as I come above, in location, don't forget, I'm looking for this. This is called mean reversion, and this is posted in TraderLab. Now, I got to get above this. So this is my resistance. See the behavior, resistance. And how now, resistance. So longs to here. If you can't get in here, you hang out, you wait. And now resistance. Support is here, because there's the absorption. The sellers were there. They're now getting absorbed. And the buyers are there. Okay? And you can see this little behavior here. High volume is right there. back on the gravy train, you know? So so you got support there. You got support here. Break high. Support here. Absorption there. All these are longs. And you're looking to come back across here to the swing here. And you can see the selling there. You get a sweep right up here, and there's your counter rotation. We are now at VWAP in mid. So you could be scaling, and now you're back on the bus. Where are we trying to go? Back on the original trade, back here and there. Those are still our targets, not a recommendation. That's about it. Now, there are other trades I can show you if you want. Do you guys have questions? All it is for me is longs. Now, I want you to know, you could be trading short. It has nothing to do with me. You know, what I do and you do. And now we have another thing. Let's go back to our statistics. We have over 98% probability taking out the first hour's high or low. Given what we know, and as Dirty Harry used to say, do you feel lucky? Do you want to be a fader? Or do you think maybe this is the next target? And where was my resistance? Let's come back. Very interesting how the market works. Remember, chop, chop. I'm not paying that. I'm not paying that. I'm not paying that. I am not going to pay that. Rotation. Are you guys seeing something interesting? How we doing? How we doing in YouTube? You guys getting something out of this? This is the TraderLab. You're all invited. There's no cost. Now, you say, now what? Here's what. I want to make a point of showing you this, because this is where the magic is. This is no indicators, guys. All I'm doing is something very simple. I'm shopping. And if I went to this store before I had this, would we maybe say there's resistance here because I found a seller? Here's the concept. If sellers, and there's the icebergs, found this too high, is it possible that these shoppers will resist paying this price? Is it reasonable that if I get VPOC migration, let's look at the opposite behavior. I got to show you this. Now you know what the auction is. If you haven't thought about it, this is what the market is all about. The market is not your indicators. The market's participant behavior. And when you have trailing price-based derivative indicators that don't have any clue as far as the condition of the market or why you might want to get long, they're just mechanical. They just operate on rotations, you know. So is your indicator getting you short there? Is it getting you short there? Is it getting you short here? Is it getting you short there? Did it get you long? Did it get you long there? What did it do? I don't know. I don't use them, so I don't know. I do know I have used them for too many years, and they are now in the scrap heap where, in my opinion, they belong. If you don't understand the condition of the market, how to read order flow and understand the process of price discovery, then you've really handed over your financial future and your business to random inputs. And you, in my opinion, again, it's just an opinion, random inputs, old saying from computer world, garbage in, garbage out, no consistency, random winners. We had a magic 8 ball on the trade desk, and you could ask that. It did as good a job as anything else. Sellers were here. This is the key. This is resistance. I want you to see how this fits together. This is Matryoshka dolls. Notice this comes up, and that's your resistance. See it? See the liquidity come in? This is the sellers that were over there. They're selling up here. Don't ask me why. It's not my job. And where's my support? Here. VWAP VPOC, resistance. So I wanted to show you one other little thing just to help you. You notice when this moved up, we broke below it, the market went down. Here it moves up, we break above it. The market goes up. What is this? A sell sweep. What does that suggest? At location. This is mean reversion in a fractal. This is your resistance. And we have our ETH high over 90 whatever percent probability, wherever that's going. Oh, VPOC migration. What does that say to this astute audience of traders? Watch. Up. 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 Resting liquidity. Well, that's about it. I wish I had more for you, but how many of these do you need? For me, I'm a minimalist. I prefer trading for larger rotations, takes care of the stops that we all inevitably take. If I'm risking, let's just say, 3 points to make 4 points, I'm not interested. I risk 3 points. I trade, of course, more than one, but let's just, at least 2 is the minimum configuration in TraderLab, the first one. And this is just a fundamental process to start. The first one's to manage your risk so you can start managing your fear. Then you have a runner, and it's trade management or structured targets. And then that's your trade, you're done, and you go on to the next bus. Too low, too low, too low. Target, target. Questions? Yeah, Gary, I can answer those questions in TraderLab. Use the link down there. What do you guys, have you guys lost audio? One moment, guys. I'm getting reports of no audio. I'm assuming that's in Discord, right? Oh, okay. Thanks, Cyber. All right, let me see what's going on here. One moment, guys. Everybody, we're taking what you call a timeout. I got to check the connections here. Make sure we got everything. No, everything is supposedly working. So I don't know what to tell you about the audio. So is the audio back now in okay, thanks. Somebody post in there to drop out of Discord and come back in. It's a Discord thing. So it's not over here. Sorry, guys. You guys in YouTube, that was a brief intermission. Hope you got your popcorn. So back we go. So this is the target. This is the target, 61.47. What is this? I know. I'm asking myself. Let me tell you what it is. When you have microstructure, these little HV, I call them high volume nodes in the micro, this fractal, that is the same as this, except this is, quote, a higher time frame. So what I'm doing is I'm trading in fractals. So I break these things down in time frame, but the clock doesn't regulate this. So that's a thing, it might sound semantic. It's really not, because I'm not imposing the clock, 5 minute, 1 minute, anything on this. I'm using the participant behavior, and it's not clock related. It is participant related. So if I find too high in a fractal, I know now it's resistance. That's why this happened. resistance. And then if I go up in time frame, I have support. Now, it's going to blow through into stops. There's 200 stops, 400 stops, life in the fast lane. But when I come back inside, now I'm back in my fractals. And now my developing time frame, a little higher time frame, this is too low. This is resistance. That is resistance. So notice where it comes. So all of this is structured. That is support. There's a sweep. There's a sweep. All these are longs. Long, 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 resistance, resistance, sweep, continuation, longs, pullback, longs, 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 longs. Resistance. And notice where this is stacked. Right in front of the ETH high. We're not the only ones now have been doing data mining, which we do in the TraderLab, and reverse engineering structured trades. I've shared 60 PDFs of these. You're all welcome to them. There's no cost. And there's a library of webinars on the process. The thing that is probably difficult for most of you is to actually take responsibility and tear things down and put them back together. There's no plug and play. This is not the place to come for plug and play. This is an advanced trading process. Now, the thing about advanced is it requires you to learn to think and understand market mechanics, why the market does what it does, how at times you can get in alignment, define the conditions of the market, and then only deploy structured trades that are in alignment. It is not about flipping around like a flounder on the dock. At least, it isn't like get short here, get long there. That's not the business of trading. And again, it's only my opinion, but I've been a high volume trader, 100 trades a day, been there, done that. When the dust settles, my broker comes to the house and thanks me for sending his kids to camp. He's my partner. And that's great having a partner, except I still pay him if I don't have a profitable day. He's always there. And if I have a scratch day, he still had a good day. I still lost. So for me, the decision, and this is many years ago, was to lease a membership and lower my cost or change my time frame. Well, over time, I decided that I like the broader stroke, if you will, because I'm taking the same risk. I never really could get my risk down. 6 ticks was about as tight as I could get my risk in the ES. Never really could get it below 6 ticks. And as the volatility picks up, then your stop is going to have to expand because of the noise. That's just the way it is. So I run around 2.5, 3-point stops, and it's only because I can, not because I choose to. It's because I can, because of my ability to read the order flow and to execute on a timely basis. I still am fearful because of uncertainty. But I understand if I can read this, I know my buyers are there and my buyers are there, right there. And I know if I rotate under this, that there's going to be stops here and that the icebergs who are buying here and here, if I pick stops off, like here, if I come under here, these buyers may activate again. I don't put my stop there because that's easy picking. Why? If I'm coming down, there's sell stops. That creates market orders and momentum. It could come outside. And then if I run out of those sellers, these buyers can come back in, these guys. So I don't put my stop there. I could. I'm just saying is I use that understanding that if I get the stops and I get absorption, I can then take the other side for continuation. This is another element you can learn in TraderLab. Now, to be really quite upfront about the whole thing, you don't just come to TraderLab and you're going to roll your sleeves up and in 2 months you're going to, have a sustainable business. It's not how it works. Don't we all wish it would? That's why you guys have gone through these other gurus and the Instagrammers and all that stuff. If you've been there and done that, You're always going to say, well, I got something out of it. But if you're not a profitable trader, maybe you didn't get something out of it. Maybe you got more noise and an inconsistent input that has no edge. That's the I call that the catch-22. By the way, there's another trade here I neglected to tell you. We have, remember, structured trades. And the IB high, or which is the first hour's high, and you do remember there was over 98% probability. We take out either first hour's high or low, and don't forget this is our next target, and we got this thing. We have something called the IB continuation trade, and here it is. So we get this. These are long continuation trades going for this for a scale, 98% probability, and now we have another long right here. I'm going to show it to you. It's a structured trade, and it's all in alignment with the statistics and the condition. Remember, too high. There it is. Resistance. Longs. Where to? Back there. Back there. IB. 98% probability to take this out. So there's your scale. This is a long. Back to there. Scale. And then helmet. 98% probability, that's why you'd take it. Break high, pull back. This now is retail. This now is support. You know, resistance becomes support. Long continuation, it's called the IBC. It is a long trade going for this and this. So all longs and no problem, I don't think. I think we're all good. Are you guys with me? This is a TraderLab. I know it's not, it might not be what you're interested in, but this is not a video game. This is about business. And I think this works. You know, it works for me. It works for the traders in TraderLab who've done the work and basically have a vetted trade plan. And then you just show up. I hope you understand there is no plug and play. And if you want to be able to do this, you're going to have to kind of tear out the weeds that are in your garden of trading. There's a lot of garbage in there that you don't know it's garbage. And the reason and it's an opinion again, it might be wonderful for you and then you bring it. The thing about it is everything works randomly and it takes us down these paths. Now remember, this is a target right here. You can be done with this trade here. There's a sweep. The sweep suggests potential for counter rotation. It doesn't mean you get short. It just means you have your helmet on. Notice this liquidity front running this. This has a high probability. You might be done right here. You could say, hey, I'm done back in the Barca Lounger. We have one trader in the TraderLab. His name's Rod. He trades from a Barca Lounger. And we have another trader in TraderLab named Furs. He actually trades out of his car while he's driving. Now that part I have a little, and I haven't figured out how to do that yet. Hopefully he's got something that has autopilot. We have traders that were taking shorts in here today, and if they have an edge, that's their thing. For developing traders, I have this thing, and it's about aligning with the advancing army. If you want to think of counter rotations as counter attacks, the counter rotations are taking the risk adverse traders out. Now, a counter rotation looks like a reversal, right? How do you differentiate? Well, you really can't because reversals start out as counter rotations. But if the trend is up, then how do you use counter rotations? You use them for continuation trades as long as the trend's intact, or ads, subject to your plan and an edge. If you're taking counter trend trades, you need to know in this context, which is very bullish, what is your statistical probability of taking shorts versus just taking longs? Do you have an equal edge, or does your edge favor the dominant side in this condition? The thing about trading that I have found, the trade plans are different for different conditions. Certain trades are qualified, other trades are not. Whereas if the condition changes, then different trades come out of the hangar and you put the other ones away. They like go on the shelf. Then you're trading a different condition. The condition changes again. Now you flip around and you're pulling different trades out. So it's not one size fits all because the condition of the market is not the same intraday and in a higher time frame. It's always checking what's too high, what's too low in all time frames and fractals. What's too high, what's too low, what's too high, what's too high, what's too low, what's too low, what's too high becomes too low. And then the next too high is going to be this one. This is the next target. And we can have a reasonable counter rotation here. So this is important. Next target, not a recommendation. This is it. Now, how do you get to do this, right? You got to roll your sleeves up and you got to kind of say, all right, this is an advanced trading methodology. What makes it advanced, and don't confuse the word advanced with complicated, it's actually simple. This is really simple because if you're a shopper, you already have the basis of trading, and that is an auction. What's too high, what's too low? It's no different. You go to the store. If the price is too high, you're going to have price resistance, you and everybody else. And some people are going to buy it, even at a high inflated price, but the volume tapers off. That's why price does not operate alone in a vacuum. It's volume. Because if you get a buyer up here and there's no volume and we run out of buyers, the market is going to rotate. And if on a higher time frame we run out of buyers, it could reverse. So in the fractal, what do we see? Buyers are still paying up for this. And this is the last location. And this is from February of this year. This was too high and we sold off. So we're looking to come back here. Is this still too high? Good question. So now we're watching this. This is our support area right here. If I can keep going, it's wonderful. If I break under here and it's not a recommendation, I could be done with the trade. It doesn't matter to me. Notice there's more selling coming in here. So we're seeing icebergs. Sellers are here. Buy sweep. If I can't keep going, I can counter rotate. That's what I know. I don't know what it's going to do. If you're interested in this process, this is really trading the auction. The most basic function of the market is an auction. If indicators are just, call them whatever, they just follow price around or some derivative, nothing wrong with your indicator. How about this? If you understand that this is longs only today and you have indicators, how do you use an indicator? Do you use the indicator? Is that your primary input? Or do you need to have an understanding of how the market works to deploy an indicator effectively? You see, most traders think of this as an indicator business. I'm going to suggest no, it's absolutely not. Because if you don't understand something called context, then you're going to be thinking, oh, it's too high. And you're going to see this indicator cross over and you'll take a short here. How about you don't take a short here? How about you don't do anything other than get long? What do you think is a better plan? What's your plan? Florian, you're asking me about mean reversion? Oh. Oh, well, thanks that. TraderLab is the best thing that has happened in your trading career. Well, thanks. I kind of think it's maybe pretty special, I've been doing this going on it is 46 years now. And I'm going to say everything that I'm aware of because I've been there and done it because of my curiosity. I'm an analytical. And because when I started out, technical analysis was really very new, Wells Wilder. I shared an office with George Lane, and I like to tell you guys this because he created stochastics. Imagine being there at the forefront of oscillators. You now have your, MACDs, whatever it is, CC, whatever you got. None of that existed. So you see these things coming down the pipe, and it's like, oh my God, this is so wonderful. Well, then you find out the problems. And if you're like me, you're trying to fix the problems. You're going, well, I got to fix this. And that's where the screwdriver comes out. Notice this. Where are we going? And we can keep going. If we get up here, there's nothing but thin air. Then it's trade management. Now, you do remember where the last long was. It was here. This is a structured trade, the IB continuation trade. So you'd have all there's been is longs. And that doesn't mean anything other than if you're in TraderLab and you had vetted it, you come to trading with a plan that exists and is put together outside of trading. That's really the business you're in. Then you show up and then you do your thing. And you wait for your trade that you have vetted. You have triggers that you have vetted. You have probabilities and statistics, which I've shared, and so have others based on the research and data mining. So you understand the TraderLab is not about me. I'm just a trader, It's about you. And we're all different. So if you can learn this methodology, at least mentally get your brain wrapped around what the business actually is, then you can learn to speak a language. I don't use the indicators. I read the language. And let's just think of your indicator like Google Translate. It translates participant behavior. I'm doing the same thing, but I'm doing it right there. I'm doing it right here. I'm doing it right there. I'm doing it here because I understand what the order flow says and I understand market mechanics and how the market works. So my indicator might tell me to get short here. Where's overbought? I mean, I don't know. Is it here? Well, if the trend is up, you guys who've played with oscillators and RSI, let me ask you, you get divergence in a trending market, you're fading it, you're fading it, you're fading it because you don't understand that mechanical indicators are not context sensitive. So you see at times that indicator gets the high of the day or something, and then the market reverses. Then you're in the different condition, and the same indicator gives you the same thing, and now you're picking the high of the day and getting run over, and you're never getting aligned for continuation trades. Is that happening to you? Well, maybe it never happened to you. It happened to me over and over. Then I built trading systems. I thought I could do it better. No, what I did better was optimize. I didn't get a different result. I still had my winning trades. I still had my winning weeks, and I still could not keep the dollars. They would start, it's almost like a spacecraft re-entering the atmosphere. It would be great, and then it would decay. It would be great, and then it would decay. So the re-optimization schedule I created was to get out of the decay. All I did was I just kept moving the problem forward, and it was a defective process. You guys do the same thing. You might do it with a screwdriver or an eyeball. It's all the same. You keep coming back to the same place. That's Trader Groundhog Day. Next target. You could be done. Or you're just using a trade management process and you're just trailing, and whatever it does, it does. Any questions, guys? This is TraderLab. Please give a like. Hope you're getting something out of this. Thank you, Sniper. Well, thanks, guys, the Bookmap Discord TraderLab community. All of a sudden, they're saying thank you. Well, that's good enough for me. It's always good to get a little appreciation. I hope, traders out there in YouTube, that you kind of appreciate what you're seeing. I do this every day, and Bookmap asked me if I would do this, and when I'm doing this, I'm not trading, but I can tell you I get enough trades in here. I'm not too concerned about it. I'm doing this a long time, and I start early in the morning. So subject to the condition of the ETH, there's trades in the ETH. How many of these do you need a day? Me, I'm more into sitting in the Barca lounger and letting the trade work. Now, if it's very volatile and very choppy, I'm much more active. The range determines, but I'm very much into this risk reward thing. You know, like I don't like paying for nothing. If I take a stop, it's got to be worth it. Because if in my risk protocol, if my risk is 2.5 to 3 points per contract in this volatility, and I'm long from down here, and I have ads up here, I'm all right. What about you? If you traded to here and you exited the trade, and now you're back in your Barca lounger and you're getting your pizza delivered, would you be all right with that? This is a high probability target. This is a high probability target. And then you'll be done. Go to the beach. Please give a like if you're visiting in YouTube and subscribe to the channel. There's a lot of additional education in the Bookmap server. Stocks, options, crypto, order flow with a high tier tool like Bookmap. Let me tell you, this, the tip of the spear. That's what I call it. Because now I can open this up and I can look inside the microstructure. So when I'm looking, let's look at this microstructure. You've heard this in real estate. Location, location, location. What do I see here? Let's look in the micro. I can go as deep as I want or as micro as I want. Let's come back to the target. Wasn't that the target? Okay. Buyers are here. Buyers are above the sellers. Just grabbing this thing. Buyers are above the sellers. Sellers are there. Buyers are here. Buyers are there. Microstructure. Sellers are there. There's the icebergs. Buying icebergs. Notice the selling icebergs. Buyers are here. Those guys are absorbed. Sellers are here. I got liquidity here. I got liquidity here. 220 sitting up here. I need to be, and it's a strike price, 61.50. Isn't that lovely? Sellers, sellers, buyers. Buyers, sellers. Sellers are here. Buyers are above the sellers. Sellers are here. Buyers are here. Sellers are now below the buyers. That's important. Sellers got below the buyers here. That's important. Where were my buyers? Here, here. Absorption. Where are my buyers? Here, 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 here. Sellers are below the buyers. Sellers are here. Sellers are there. Buyers are here. Buyers are here. Buyers are above the sellers here. Sellers get below the buyers. What do I know? Sellers are here. Sellers are there. Buyers are here. Break. Trouble, potentially, in Rivers City. Target was there. Would you be okay with this? TraderLab. Yeah, Kevin, you know, the thing about targeting, the thing about the auction that's so interesting and really got me. Now, I learned market profile in the mid-'80s from the guy who created it, Peter Stottlemyre. He was over at CBOT, Grain Trader. And I think it was 1985. You know, I can't remember some of this stuff. And when I first saw it, and it was TPO, so we didn't have volume, it was time, because we didn't have any volume back then. No domes, no internet, Zippo, nada, forget about it. So I couldn't trade with it. Because what I did was I said, this is a great idea. And then I still was using indicators. And if you want to know how to mess something up, you can DM me, we'll talk. So I was trying to put more, because I was still in the idea that more created more certainty. I still hadn't gotten yet to where I accepted that the problem was more. And the reason I was doing more, now I understand it. Back then I didn't have a full understanding of psychology like I do now. It was because I thought more created certainty and reduced risk. Isn't that what we think? That's what we all think. Now, here's the next question for this astute group of traders. Why do we think that? It's because we're wired to seek it, to avoid risk. Our natural wiring, our primal wiring is to avoid risk. If you're already wired to avoid risk and it's not part of your consciousness, you automatically set on this quest for risk avoidance and certainty. So everything you do in this business is based on certainty. And all the gurus and the influencers and God knows what else is out there, and there's nothing new out there, by the way, are going to wrap their marketing in certainty, and they show you winning trades. And that's all fine. You know, everybody has winning trades. You do, I do. But if you don't have an edge, in spite of the winning trade, you're still going to lose. Casinos pay to gamblers, but because they have an edge, they extract the dollars from the gamblers. The gamblers get paid, but they don't have an edge, but they have winning hands. Same business. So write that down. You got to understand the business you're in and understand the psychology you're pushing against, the primal wiring to look for certainty, but you're in a business that doesn't exist. So the TraderLab, what I've shared is to understand the business you're in and then to solve for the business, not your psychological primal wiring. You cannot solve for it. You got to solve for something else. That's why I agreed to do TraderLab. We're all chasing the wrong idea. And the idea is generated by our subconscious needs to avoid the saber-toothed tiger. You're not able to intentionally run into the burning building. You are wired to go the other way, whether it's a saber-toothed tiger or some apex predator. You're not running towards the danger, you're running away from it. So you are already predisposed or pre-wired to spend all your energy on avoiding that risk. Does that make sense? How are we doing? Are you guys tracking? Please give a like if you're visiting in YouTube. Let me show you the TraderLab. I just want to show you a couple of things here before I say arrivederci. I appreciate you all visiting TraderLab. By the way, this is what the 60 PDFs look like. Again, this is not plug and play. I'm not a vendor. There's no course, and of course, there's no holy grail. This is a trade I was actually in. I was short, having a lovely time. And this is liquidity, right? And so this is just order flow. Look at this bracketing algo. He pulls over here and he pushes from there. And I'm short and I'm going, we'll see you later. Exit. Just showing it to you. And I blew out and then this thing exploded to the upside. Having order flow, I think, once again, it's about understanding market mechanics and using tools. Some of this is experimental. I was working with Bookmap developers, and this is, back in whenever, 2020 or something. And I was working on ideas, and some of them are now incorporated in add-ons. The rest of it's gone the way of the dodo bird, right? So that's the 60 PDFs. Now let me show you the actual TraderLab community and the library of webinars. There's a lot going on in TraderLab. Again, it's not romper roam. It's a professional environment. It's up to you, of course, what kind of environment you want to be in. And I appreciate everybody who's part of TraderLab. By the way, it takes a community. This is an advanced trading process. Now, don't confuse the word advanced with complicated. It's actually simple. What's advanced about it is we kind of remove all the debris and we get down to what is this business? How do you navigate it? How do you create a trade plan? And what is this thing called statistical edge? How do you get it? How do you develop the discipline not to trade in traffic, but to wait? All of this is the challenges we face, and it's common. We all face the same thing, So you're not unique. None of us are special. We're all human, and we're all subject to the same issues. And thanks, Ned, by the way. Ned curates this for us. It's a team effort in the TraderLab. There's a lot of contributions. It takes really a village to do the work, the data mining, and mutual support. Watch the primer webinar. It's got about 33,000 views. This will give you a high-level overview. It's about an hour. Stop gambling, start winning. Understand where you're sitting. Which side of the table are you on? I can assure you, if you start thinking about how gaming works, you'll be way ahead of most traders who are just playing a video game. And yes, you are going to pay the gamblers. The house pays the gambler. Are you trapped in trader Groundhog Day? That was me. Years waking up in the same place, working hard, tuning, tweaking, experimenting, seeing patterns. We're very good at pattern recognition that have no edge, but we see them and then we play with them and maybe start trading them, not knowing that you can have tons of winning trades and still lose with a specific process. If you knew it was a loser, even though it has intermittent winners, would you still keep trading it? Me? No. Did I know that? No. What did it cost me? Too much. What about my errors? Why did I keep making so many errors? Because I was using random inputs and I didn't have tangible statistics. When I don't have a tangible statistic, I have my fear and I have my emotional triggers, which are always present. What did that do? Created inconsistency, bailing out, skipping trades, moving stops. I can keep going. Why? Because I'm in a random environment. And if I don't have tangible probabilities that I can touch, all I have is emotional triggers. That emotional trigger is chemicals released in my brain and yours. What does that do? Scrambles your intentionality. It's no different than you stepping in front of a bus, and I'm not wishing it on anybody, and you don't process stepping in front of a bus and think about it on a conscious level. What are you going to do? Jump out from in front of the bus. Primal wiring. So that chemical primal wiring, the release of the hormones and the chemicals in your brain are always operating, and this instinct, you will, is always watching. Well, it's still going to intervene. It cannot differentiate. Fear is fear, risk is risk. It's always going to push the button. You're always going to jump out of your skin, and you're going to make errors. When you have statistics, now you've taken more control over emotional stimulus and emotional triggering behavior because you have a tangible metric. You open your trade plan if you're in TraderLab, you know what the probability is of one thing happening over the other, and you understand you can take a stop because it's overhead and cost of production, not a personal failure. Does this resonate with you? Well, please give a like if you're visiting in YouTube. Use the link down there if you're interested in visiting the TraderLab community. There is no cost, and it is for everybody. The only thing I want to say is it's a professional, business-oriented community. It is not romper room, and if you're looking for entertainment, there's probably better places for that. This is really about the business and career building and creating sustainability. And while past performance can never be indicative of future results, we're all different, right? I do believe this is someplace you ought to visit on your journey. Maybe it can help you. Thanks again, guys. Don't forget to like on the way out. Look forward to seeing you tomorrow. And TraderLab, thank you for the comments and the support. We're all in this together. Let's all get better together.